right, welcome back. Welcome back. It has been a little bit since I made a video here. Been in the process of buying a new house and moving in and all of that good stuff. But we're not going to skip the fact that we are on the cusp of quite possibly one of the largest bull runs in crypto that we have yet to see. I think that dominance here at 61 to 63% is soon going to be a thing of the past. And this money that you see in Bitcoin and also meme coins and other markets that are doing exceptionally well are going to rotate down into AI, gaming, Beam, Akash, Render, AIOZ. These are really going to start moving fast. And for the people who are already in altcoins and are not happy with the performance of their said altcoins so far, do not judge your portfolio on how well it's doing when Bitcoin dominance is over 60%. Better yet, don't judge your portfolio at all when Bitcoin dominance is at 60%. If it is remotely staying alive and somewhat green sometimes, you are just fine. Because as you can see here, alt season is not random. It is very well thought out. In the bubbles here, 2017, Bitcoin dominance going from 95% all the way down to 37%. Granted, the market was much smaller then. The amount of coins out there were a lot less. However, that does not mean that we don't get an alt season now, because there is exceptionally more money in this space than there ever was previously. Thanks to BlackRock, ETFs, and just overall market growing at an insane rate. We have meme coins now that are more than what entire markets were back then. So you can see 2021 here. At first, we had this pullback here on Bitcoin dominance. It went back up. That's represented in the chart. I mean, you can look back and see Bitcoin ran all the way up here, pulled back, alts did well, Bitcoin took the stage again, and then from there, alts had their show. I mean, it went from 72% all the way down to 41%. I don't think you're going to see Bitcoin dominance get to 70. I think probably 60, anywhere between here and probably 63 to 64%, maybe not even that far before this starts to roll over. So, like I said, if you're in alt, sit tight. We are getting hints of more retail exposure here. Shout out to Into the Cryptoverse with the insane charting stuff here. Let's pull this up. All right, so as you can see, if this would load. All right, we've got, let's see if we can move this around. Okay. All right. Previously, this is going to track all new Twitter followers of some rather large accounts, BitBoy, Altcoin Daily, all the main stuff. If you're on Twitter and you're in crypto, you're going to be following these guys: Alex Becker, Benjamin Cohen, Coin Bureau, Cryptos R Us. You can see the inflow here of retail. Not to say they weren't already there in early 21, but you can really see it ramp up here. And if you zoom in here, this is the exciting thing. Where we are now and what you're seeing happen in the meme coin space, I believe, yes, there are retail investors here. There are people that have never been in this space. But I also believe that it's a lot of already existing crypto people that are really moving that. You're not seeing this huge, I mean, yes, you have an influx here. Let's see if we can zoom in and get a better look. This is starting to tick up, which is what we want to see. on the Twitter followers, but it's nowhere near what it's going to get to. I mean, you're talking 3 to 4x from here in terms of that exposure. All right, let's jump back over to YouTube views. So here's YouTube views. They are starting to go up, and nothing like it was previously. The space has grown since then, but it will increase as we go forward. You can see the uptick here. Let's see if we can go back. Right. Historical risk levels. This is one to watch. A lot of my exit plan is based on historical risk levels. As you can see, this is Bitcoin. We are at 0.609. Bitcoin price $91,000. Last cycle, it got up to a risk factor of 0.92. You can also look and see how many days that it has spent time in this wristbands. So let's go to what everyone wants to see is altcoin market cap. Every cycle, this has got up to a 1.0 risk, which is absolutely off the chain. Same thing here. Same thing here in 21. To give you an idea of where we're at now, we're at a risk level of 0.61. Altcoin market cap 648 billion. To give you an idea how much it has to move for that to go up, the market cap was around 3 times less than what it is now last October. The risk level was 0.28.3. So it doubled. It had to double to go up double on the risk. So if we go look at the current risk levels, altcoin market cap, zoomed out, 0.9 is going to have us at around 2.73 trillion, which is insane growth from here. So we've actually formulated a exit plan. Once certain risk levels and parameters are hit here on the metric, we're going to start reducing our size across the board in every holding of the altcoin market cap. So right now we are at a well under the 0.7, which is 1 trillion. I think that's going to speed up pretty quick. And then Bitcoin, we have it at right at the 0.6, and it's spent quite some time in the 0.6 to 0.7. As you narrow down to days spent in the wristbands, this is where it gets interesting. On average, Bitcoin has spent around 344 days total in the 0.6 to 0.7, which is where we are now. Let's go to the fourth cycle. In the fourth cycle, most recent cycle, Bitcoin spent 61 days in the 0.6 to 0.7. It spent actually more days in the 0.7 to 0.8 upper wristbands, 0.8 to 0.9, 45 days, and only 3 days in the 0.9. So formulating a exit strategy is a lot easier when you have this data. Altcoin market cap in third cycle, which is the previous one, 144 days, 134 in 0.7, 119 in 0.8, and 30 days in 0.9 and 0.1, or 0.921. So, you know, I have an idea when to get out here on the altcoins. It's definitely going to help out. Looking back, getting a nice pump here on Bitcoin. Looks like it's been flagging up here. Altcoins really are been bleeding dry. I mean, we're over 60%, which is not a favorable altcoin environment, and Bitcoin has still got the spotlight here. I think personally that we see a top of Bitcoin around the 120 to 140 mark, if I had to guess. Um, the real show on altcoins start after that. So set tight if you're in altcoins and you're not too happy. Try not to kill yourself on leverage. Don't get overexposed on something crazy because you're just getting bored. Set tight, check the risk metrics, and watch as retail come in and pump our backs to infinity and beyond. So best of luck.